Zillow reported second quarter results which beat the street's expectations for EPS, and management also increased their EBITDA margin guidance for the third quarter and the full fiscal year. As a result, shares were up 15% in after hours. In this video, we're going to take a look at the new guidance that management provided, plug it into our earnings model, and use the results to determine if that after hours price move makes sense. So to do this, we have our new model, which includes the June data from the release on the right-hand side of the screen, and on the left-hand side of the screen we have the old model, which was from our preview video that we published last night. So if you go through the release, if you go through the earnings transcript, scroll down to the Outlook section, which is, of course, at the very end. So you can see management gave a ton of guidance again for this quarter. So there's a number of moving parts again. The stock split, they gave diluted share information based on the split shares. So to keep this consistent with the view that we had before the release, we're going to do this on a pre-split basis. And then when the split goes through, we'll update the model again. So for now, let's start with the revenue line. So we've now updated our September revenue to be $176 million, which is the midpoint of management's guidance. $10 million of that represents market leader revenue. So if we scroll down to our segment section, you can see we've included $10 million there. Now the year-over-year growth rates for the real estate segment, they've put in a growth rate of 25%. That's probably a pro forma number, which includes Trulia in the third quarter. So it's a little difficult to get back to that growth percent for the real estate business. But we have essentially taken the fact that they gave us the display revenue, which is in line with the second quarter, and they already gave us market leader, and we'll keep mortgage revenue relatively consistent with the second quarter, and then the remainder is basically going to real estate revenue, which gets us back to our total of the midpoint of $176 million. So we're going to use the pro forma EBITDA instead of GAAP EBITDA. Then they give us the diluted shares, which we put at the bottom of our income statement. Okay, they also give pro forma revenue guidance of $690 million. And if you recall from our video last night, the pro forma revenue section is at the bottom of the segment details. So you can see for the full year, we have matched to management's guidance of $690 million. For total pro forma revenue. And again, market leader revenue, $40 million. So the one thing to note here on the market leader revenue is since they guided full year to $40 million, that means it's going to really drop off a cliff in the fourth quarter. But that can be expected because management has stated that they're essentially running that business off, or at least not spending on advertising there while they determine what exactly they're going to do for their customers that currently subscribe to that business. So that does make sense. Alright. So this was the key. We're raising our pro forma EBITDA outlook to the range of 85 to 90 million. So it was 80 to 85 million last quarter, and now that's been increased by an additional 50 million. So we have that. We have set pro forma adjusted EBITDA to the midpoint of that range. And in the comment here, you can see that we put what the guidance was last quarter and then what it's changed to this quarter. Now within that pro forma adjusted EBITDA is the depreciation, acquisition-related costs, and restructuring costs, which management also gave guidance to this quarter. So we have pro forma depreciation amortization of $90 million, and then down below you can see acquisition related costs of approximately $18 million and restructuring related costs of $31 to $33 million. So now, having put all of that additional guidance in, and essentially leaving the remaining estimates consistent, we now end up with a share price of $88.50, which is $69 based on our DCF approach and $108 based on our multiple approach. And if you compare that with what we had last night, we had $72.50, so that represents a 22% increase from yesterday, just given this new information. So does the 15% move in after hours make sense? Yeah, it makes sense. I mean, this might be a little bit aggressive, and we might see, once the new consensus estimates come out, we might see some of the later periods come down a little bit, which might change this price slightly, but either way, it does make sense that shares are up in after hours after such a strong quarter. Okay, if you'd like to download this model, please visit our website, www.gutenbergequityresearch.com. If you click on the Models in Focus tab, you'll see we have our video which explains our DCF and market multiple valuation approach. You can also click on the Zillow model for additional details on how this model works. Or if you'd like to download the model, it's available in our model store for just $5. If you scroll down to the Zillow, you can click here and download it. And be sure to check back later next week after the stock dividend goes through. We'll update our model, and we'll also update it again once the consensus estimates are in. Thanks for watching.